I think silver is about to launch in a way that will drop jaws. I don't think this launch is the end of the bull market. I think it's just an acceleration phase. My assessment, and this is technical, is that this acceleration phase is likely to blow through 50 very easily and maybe pause between 60 and 70. And that occurs in the next, within 2 quarters, probably even less time than that. So, but between now and the end of the year, I think during that time, gold will also go up, but it won't go up as much as silver on a percent basis.
Michael Oliver of Momentum Structural Analysis believes silver is on the verge of a breakout that could drop jaws, projecting prices could surge beyond 50 and potentially reach 60 to 70 by year end. According to Oliver, this is not the culmination of the bull market, but rather the beginning of its acceleration phase. A key indicator supporting this view is the gold to silver ratio, currently hovering around 90, a level not seen in nearly a decade. The ratio signals a rare opportunity for silver investors. This elevated reading suggests silver is undervalued relative to gold, echoing previous moments in market history that preceded explosive silver rallies. Adding further weight to the bullish case is a recent technical breakout above critical resistance levels. The convergence of strong fundamentals and bullish price action implies that silver could be at the beginning of a multi-year uptrend. Historically, major silver bull markets, such as those in 1980 and 2011, were marked by dramatic outperformance relative to gold. Oliver notes that during those periods, the momentum structure ratio surged well above 2%. Currently, it's sitting just above 1.1%. If the market closes a monthly session above that level, it could indicate the beginning of a major move toward 2% once again, suggesting silver could significantly outperform gold in the coming phase. Silver's rally in 2020 serves as a compelling precedent. After breaking the 35 level, prices soared by 140%, driven by Federal Reserve rate cuts, massive stimulus spending, and a gold-to-silver ratio approaching 100. Today's macro environment, characterized by expectations of Fed easing in 2025, rising industrial demand, and elevated geopolitical risk, bears strong similarities to that period. Reflecting this conviction, Oliver has shifted portfolio emphasis towards silver and silver mining stocks. While gold has led the precious metals complex in recent years, he believes silver is poised to assume leadership in the monetary metals space, marking a decisive turn in investor sentiment and market dynamics. Make sure to tune in for our expert analysis. Don't miss out on future content, hit the subscribe button, and turn on notifications to stay in the loop. Your support is greatly appreciated.
I think we've entered it for silver. As you noted, there were two highs at 35. One was last October, and the other one was March, just prior to that puke drop we had when we dropped 2750 in early April, trying to act like, oh, I'm part of the stock market, okay, which it isn't, okay. Gold, meanwhile, during that drop had a single percent drop. Silver had a $7.5 drop, most of that in 2.5 days, by the way. That cleansed the market, and you came back up. And when we got above 34 recently, we had, yeah, these are monthly bars here, yeah. You can see the dual highs at 35 there, that shelf there, yeah. And we got above that early in this month, and we defined about 34.90 as a breakout that would blow through the 35 level and get a triple top breakout, meaning you hit 35, back off, hit 35, and you hit 36 as a triple top breakout, right? So the price guys sort of woke up then. And for the last 4 weeks, it's been dull, dead, and firm, closing the weeks out basically at 36 or higher. For like, see, look at that. I mean, they're selling it, but it ain't going down, okay? It's just sitting there taking it. And during this time, of course, the stock market's going up over the last 4 weeks. Silver hasn't. So, who cares about silver anymore? We got the stock market. Okay. I think silver is about to launch in a way that will drop jaws. I don't think this launch is the end of the bull market. I think it's just an acceleration phase. My assessment, and this is technical, is that this acceleration phase is likely to blow through 50 very easily and maybe pause between 60 and 70. And that occurs in the next, within 2 quarters, probably even less time than that. So, but between now and the end of the year, I think during that time, gold will also go up, but it won't go up as much as silver on a percent basis. All it is every single year, those graph bars show what is the highest reading of silver, divide an ounce into an ounce of gold, express it as a percent. And you can see there's a red line going through 21 of those 50 some odd years where it's at least 2% silver price divided into gold. And in bull trends, like in 79 and 80, when it went up to 6.5, or in 2011, when it went up over 3, it goes even higher than the 2%. Right now, we're just above 1.1. We're not at the high of that. That just shows through 2024, but we're moving up toward the upper end of those last three graph bars you see there, which are in the low 1% level. Okay, we analyze this on a closer up basis, and we argue that when you close a month out above 1.1%, right now we're toying with that number right now. Divide silver into gold, express it as a percent. Okay, we're using right now July silver there in this month. We'll rotate to SEP next month. And August gold. Okay. Right now they're trading maybe even better today. I'm not sure. 1.1% area. You close a month out over that, and I think we're going to start a move that takes us up to that 2% level. And you say, well, big deal. Gold go up another $1,000 and silver will be 60, 70, and if gold goes higher, which I think it will ultimately. But right now, my focus in my own portfolio, and we reveal this at the end of all our reports, we show what we own, is emphasis in silver and silver miners. I think that's the better place to be in the monetary metals category. It has not been the best place to be for the last couple of years because silver has, while it's gone up in price, it is underperformed on a percent basis the gains gold has produced. I think that's going to switch very quickly.
Gold prices are likely to remain elevated amid ongoing global uncertainties, according to market experts. The latest annual report from Titan notes that geopolitical tensions and macroeconomic instability are expected to keep gold in high demand, reinforcing its traditional role as a safe haven asset. However, short-term fluctuations continue to reflect shifting market sentiment. Recently, gold dipped to a near one-month low, following progress on a U.S.-China trade agreement, which boosted investor risk appetite and temporarily reduced the appeal of bullion as a defensive play. Despite this pullback, analysts believe the broader trend for gold remains strong, underpinned by long-term structural and monetary factors. Michael Oliver, from Momentum Structural Analysis, emphasizes that while a weakening U.S. dollar may offer support to gold, it is not the primary driver of price movements. Instead, the anticipated breakdown in the dollar's strength is significant because of its broader impact on global financial markets. A declining dollar could create ripple effects that enhance the bullish case for metals across the board, not just for gold. One of the key indicators Oliver highlights is the performance of GDX, the popular ETF tracking gold mining companies, many of which also produce silver. Since mid-2020 or early 2021, these mining stocks have risen but have consistently lagged behind gold in terms of percentage gains. That underperformance may now be reversing. Let's get back to the interview.
And gold made its low, which is in the middle of that chart when you surged up to the 100 level. Right there. Yeah. That's when gold made its bear low.
Yeah.
And since then, the dollar has oscillated to the side of that price, and gold has yet trended up sharply. So using the dollar as your primary judgment method of gold is totally wrong. I think the breakage here in the dollar that we're going to get is a couple things. One, it will provide more wind for gold. It's not a primary driver, but it will help. But the other thing is, it was the quiet one during 2023 and 2024. It was in an 8% range. There was volatility in other markets, but the dollar was dead. There was no volatility, no waves impacting anything. Euro, yen, it was just all muck. Now suddenly the quiet one, I think, is waking up, or rather down, and that will create wave effects in other markets.
Philadelphia one, yeah.
And then we look at GDX, which is the popular gold mining ETF, which also contains about a half dozen big silver miners. We think that relationship, which has also been underperforming gold over the since mid 2020, basically, or 2021, the miners have gone up nicely, but they've not gone up as much on a percent basis as gold has. That spread is starting to break out, meaning if you looked only at the month-to-month closing relationship of GDX price to gold price, you would see a structure, a trend structure, and it's breaking through that. It tells me that coincident with the silver shifting to outperform, you're going to have the miners shift to outperform. So yeah, gold is the mama, but it's not going to lead from this point forward. I think silver and the miners will now lead. I've sent that chart out many times. Yeah.
Yeah.
Look back in the 1980s there. You'll see that it lived in a range with lows at 17.5% and highs up in the mid 30s%. In other words, you divide XAU price into an ounce of gold, and it was 17.5 to 35% range, lived there for 2 decades. It was normal, in other words. But when the bear market started, well, in 2008 for this spread, but especially once the bear started in 2011 and 12, in net price, I'm talking, the spread collapsed. Okay, now I mean, they're not going to go to zero. Okay, miners aren't going to go to zero in relation to gold. They went down to like 3% something in a spike. And that occurred coincident with when gold and the miners themselves made their price lows. Turned annual momentum long-term bullish on gold in February of 2016. So 2 months off that low, that spread low. The spread started to turn up. Not just the price of gold and the miners, but the performance of the miners shot up from that exhaustive low reading. And they've lived in a range now, and we're in the middle of it right now. Okay. My emphasis is silver miners for the
Yeah.
same reasons I explained. The gold miners are going to be gold, but the silver miners, I think, are going to come slingshotting out of here
Yeah.
on the coattails of silver in a way that causes jaws to drop. Okay.
Yeah.
So that's where I am personally. I'm an emphasis silver and silver miners.
A turning tide appears to be underway in the precious metals landscape, with silver emerging from the shadows of gold and hinting at a powerful resurgence. The momentum building in silver, coupled with historical patterns and macroeconomic tailwinds, paints the picture of a market on the edge of dramatic transformation. Not only do technical patterns support this view, but shifts in the broader financial ecosystem, such as changing investor appetite, undervaluation metrics, and strategic positioning in mining equities, reinforce the notion that silver may no longer play second fiddle. Meanwhile, gold continues to hold firm as a global barometer of uncertainty, yet its dominance may soon be tested by silver's rising appeal and relative upside potential. Could silver's shift from laggard to leader redefine the hierarchy within the precious metals market? And are investors prepared for such a realignment? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.